Facing a little bit of volatility in the markets this year often leads investors to question, should I be making any changes? Well, I've got 3 counterintuitive changes you need to consider. That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. When you look out over, almost 40 years, on average, the stock market from a high point to a low point declines about 14% a year. If only it was that predictable, and if it was that calm, right? But actually that's an average, which means some years it's way beyond that, and other years it's a lot less than that. And in last year, 2024, the stock market didn't face that significant of a decline. In fact, if you think back on it, you might even wonder, well, wait a second, was there any turbulence in 2024? What about in 2023? Those were well below average. 2022 was above average, by the way. We saw a bear market not connected to an officially declared recession, but at its worst, a decline of over 25%. And yeah, we have faced our share of volatility in the first quarter of 2025. And like I said, oftentimes that leads investors to, well, number one, doubt what they're doing, but then question, should I be making any changes? Am I doing something wrong? Or should I be doing something different now that the economic or stock market winds have changed? Well, I've got a couple counterintuitive changes that you might want to consider. In fact, not really counterintuitive, it's counter-emotional. Because if you step back, or you're thinking about someone else's situation, or maybe in a cooler moment, you might say, oh no, this is not counterintuitive. This is absolutely logical. But it goes against the grain. It goes against your emotions in the moment. The first change I would consider is maybe the change of continue investing in stocks, or if it's going to be a change, maybe increase the amount that you're investing in stocks. And what I mean by that is oftentimes during these bouts of volatility, and guys, I remember vividly getting sort of bombarded with this in 2022. Hey, I'm investing in stocks in my 401k, but I think I want to begin investing, having that money go into bonds instead, or just go into cash. I don't want to invest as much percentage, that much of my portfolio into stocks because they're so volatile, and you can feel like, well, I'm putting good money in just for it to go bad, right? I'm contributing $1,000, and next time I look at my statement, I'm down $3,000. I've just lost that money. No. Your contribution, you're buying shares, okay? You're buying shares, and those shares are priced every moment between 9:30 and 4 p.m. Each business day. Okay, so the value of those shares is fluctuating quite a bit, and during bouts of volatility, of course, it's going down. Well, you are able to buy more shares when those prices are low. Therefore, that sort of emotional kind of comfort of maybe I shouldn't invest as much percentage in stocks right now. No. Leave it the same if it's the right percentage, or even consider investing a greater portion into stocks because you're able to buy more shares when those prices are low. I get it. We don't know. Inevitably, when things will recover, they always have, but we don't know whether that'll be later this year. We don't know if it'll be in a couple of years. We don't know if it's going to get a lot worse before it gets better, or if we've already seen the worst of it. We don't know. However, first counterintuitive or counter-emotional change that I would consider making is keep investing the same or the right allocation into stocks, maybe even increase the allocation you're investing into stocks. And that way you're turning this volatility into an advantage for you as opposed to just sort of a short-term fear or frustration. Second counterintuitive or counter-emotional change to make, and this goes right in line with that first one, maybe increase the amount you're contributing, increase the percentage you're contributing. Maybe not just increase the allocation that's going to stocks, but contribute more. We, during the worst of COVID 2020, when everything was falling apart in the markets and everything, we did a special edition of our talk show, the Wise Money Show, that airs every Saturday morning right here on this channel, also on podcast and a few other venues as well. And that was the open-ended question. what do you need to do? The market's falling apart. We might see a depression. They've shut down the economy. This was before all the stimulus and all the craziness that went on. No, it was in the midst of the craziness, but before all the stimulus. And I remember with great confidence and conviction, Kevin Korhorn, the first words out of his mouth was, increase your contribution. Try and max out your 401k. If you're going to max out your 401k this year, try and max it out right now. This is at a time when a lot of people were losing their jobs or were underemployed. And yeah, that wasn't able to be done by a lot of people. But when markets are going down, contribute as much as you can. This is why we believe you've got to be working with a certified financial planner, because if that throws the rest of your financial life off balance, then you shouldn't do that, right? In a vacuum, that would make sense. But when you're looking at all 6 areas of your financial life, you've got to make sure that that you've got synergy, that the seemingly disconnected parts of your financial life are working together. But if it doesn't throw your financial life off kilter, and we've seen the markets decline significantly here, yes, contribute more. If you're at 10%, increase it to 12. If you're at 6, go to 7, right? Make a small change, but contributing a little bit more during these volatile times will again allow you to buy more shares when the price is low. I don't have the graph in front of me right now, but if you look back over the last 20 years in the stock market and which year's contributions have grown the most. Let me say that differently. Which years of your contributions have worked the hardest for you in building wealth? It's 2008, it's 2020, it's 2018, it's 2022. These seasons, these years where we say, oh my goodness, those have been the most painful. Those were the worst years to invest. Yeah, but for your contributions, those are the best years to invest and the best times to invest. So counterintuitive change to make, number 2, possibly increase your contributions. And then lastly, third change to consider making, consider shifting your contributions from pre-tax to Roth. Right? So that whenever this rebound occurs, even if it's not for several years out, maybe it gets a lot worse before it gets better. When that inevitable rebound occurs in the Roth, that growth, that rebound will all be tax-free. It will all be tax-free. As opposed to in pre-tax, yep, I'll take the rebound for sure, but that growth, whenever you draw those dollars out, it's going to be taxable to you. Well, if you're on the bubble right now anyway, does it make sense to do pre-tax or Roth? Working with your certified financial planner, especially when the markets had some declines, maybe now is the time to pivot over to Roth. Maybe now is the time to do a Roth conversion so that whenever things do rebound, you've got those gains growing in a tax-free way. Work with your CFP, see if that makes sense for your situation. Any of these changes in a vacuum could make a ton of sense, might not make any sense. That's why you've got to work with your CFP who's looking at all 6 areas of your financial life and can consider these changes or others to make lemonade out of the lemons, right? Chicken soup out of whatever we're dealing with right now in the markets, however long it lasts. So work with your CFP on that. If you don't have a CFP on your team, you can contact one of my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.